Welcome back to this week's episode of Talking Stocks. Joe here with Todd Campbell, as always. And Todd, let's dive into probably the biggest news of the week, which was Monday's Pfizer news about the vaccine. So we were talking before we started recording about these kind of Corona-conomy stocks, the stocks that are, really heavily e-commerce, or they are really heavily home delivery stocks. So we were talking before we started recording about Chewy. So if you want to pull that up again, go right ahead.
Hey, Joe. We'll dive right into it. Obviously, the news that came out on Monday is it's good news, right? I mean, we've got a vaccine potentially coming to the market at some point. We don't know when. We don't know necessarily who will get it first, and we don't know exactly how it'll be distributed, right? Those are all question marks that people are going to want to have answers to for many reasons, not just from the investment side of things. The vaccine with a 90% success rate and kind of providing immunity, that's big. I mean, traditional flu shot only gives you 50% protection. It's not quite as good as things like measles, where you get up in the mid 90s to high 90s, like 97%. But it's good, especially when you consider the fact that it's been such a rapid pace of development. I think that there's big questions from investors to try and figure out how to model it. Like, okay, if they emergency use authorize it, who gets that first? How do they distribute it to those people who get it first? And then at what point do we have enough people who've either already been exposed to COVID or have indeed received the vaccination, where we achieve that quote unquote herd immunity that would allow basically all the markets to return to normal economic activity? We still have some very big question marks about whether or not we're going to get additional shutdowns and what those additional shutdowns would make. But yeah, we saw at the beginning of the week this big rotation out of kind of these names that have been doing very well all year, these stay-at-home or work-from-home type of stocks, Chewy included. We saw rotation go instead towards more of these value-oriented or under-owned baskets of the economy, and actually ones, Joe, that for weeks now have scored very well in our research. Places like consumer goods stocks and basics stocks and industrial stocks and financial stocks, like we talked about on last week's show. I thought it'd be interesting to bring up Chewy just as an example. So I'll go ahead and I'll share my screen now for people who are watching us on YouTube. And again, for those listening on the podcast, I'll try my best to try and explain to what I'm looking at. But if you look at a stock like Chewy, you can see that in August at that peak, $75, we've basically gone nowhere since August. We're building this incredibly long channel, if you will, between say 75 and at the low end, maybe 55. And that's despite, really rapid growth. 47% year over year growth in the core end in July. We're going to get an update at the beginning of December on a more recent readout of their performance. But it's hard to believe that they won't put up excellent numbers because, again, this is a company that has attracted a lot of new converts because of work or home, stay at home. And what's really interesting about Chewy is that you have that auto ship function, Joe, where you can just simply, put in the type of item that you like to get, like food, and have it show up on your doorstep every day. And I don't use the service yet. And I think there's a lot of people, although I am a shareholder, I think there are a lot of people like me who are intrigued by it, but have yet to become customers of it. And maybe that's actually a good thing from an investment standpoint, right? Because there is still some runway in what is a pretty fragmented market. I mean, I think in most places, if you drive down a busy road, you're going to see a couple different pet stores.
Yeah, absolutely. It's one of those things, like they talk about the the prevalence of mattress stores, and more often than not, there's going to be a Petco or a PetSmart right next to that mattress firm down the street from you. It's very interesting. And so there's definitely, those stores aren't necessarily closing, and so what you mentioned before, how you haven't actually used Chewy, their service yet. I think that's potentially promising for them. But the vaccine news definitely brings about a lot of uncertainty, both from like an e-commerce standpoint, and also I think everybody probably has Zoom on their minds at this point, right?
Right. I mean, Zoom is another one. We could actually pull up the screen on that. One of the things that I think is really interesting, and this is one of the advantages, just to give a quick plug to the research service that we have at Limelight Alpha, you know, we actually track these sectors and these industries for their strength every week based on our model. And you can go back and click one of the links. We'll put up a card so you can make sure you click and listen to that episode that we had where we walk through. And you know, all of those work from home, stay from home plays, Zoom, Slack, you know, they were dominant in our ranking in those industries. Software infrastructure and software application were some of our highest scoring industries for the better part of, I don't know, 6 months, you know, from through the summertime. But more recently, it's just not, they're not really showing up. It's few and far between of these cloud-based software stocks that have been so hot. They're still talked a lot about on FinTwit. They really don't show up at the top of our ranking anymore. And you can kind of see here why. I mean, we're starting to get some issues, of course, when it comes to money flow with rising sell day volume relative to buy day volume. And I think that that's something that can't be ignored in the short term. I think long term, these are all great companies, right?
Right.
And at some point, you know, these bases, the Shopify is another one, right? These bases will end up, you know, forming, they'll go out sideways and then they'll break out. Our research will pick that up and highlight that and allow people to be able to get involved in them at the right time rather than maybe suffering through the opportunity cost of owning them. You can see with Shopify, same thing, lots of sell volume here relative to the buy day volume as the stock has basically trended sideways. So, you know, I own these in my portfolio. I have no plans on selling them. They're long-term stash them away names for me. I got them at good prices. And I'm not going to sell them to raise money, but it's not necessarily where I'm deploying new money right now. Instead, I'd much rather deploy new money, and we've talked on the show about this before, into the semiconductor stocks, which screen very well for us, semi-equipment, et cetera. Applied Materials, Joe, reported earnings this week that were great. And, you know, you can see just by looking at the Applied Materials chart, you know, what's happening there with that stronger than above average buy volume in the past 2 weeks as that stock has moved significantly higher. And that's just one of many. You know, if you Lam Research is another one where you've had similarly good action. KLA 10 Core, we've talked in the past about Kulik and Sofa, KLIC as being one that should be on people's radar. So in that space, I'm more interested in say semi rather than the work from home software as a service type plays right now. And then in consumer discretionary, I would be more interested in somebody who benefits both from physical retail stores and e-commerce. You know, we talked last week on the show about Costco and Target. Those would be two names that still I would be focusing on in that basket.
Yeah, absolutely. So you mentioned earnings. So I know that you wanted to bring up earnings anyway. So since you gave us such a great segue, let's do it. So we're kind of in the middle of earnings season right now. There have been a lot of companies that have reported earnings in the past 2-3 weeks now, and the movement after earnings can be a little bit confusing. You know, company reports good earnings. An example I remember from a couple of weeks back was IBM reported pretty solid earnings, and the stock tanked. And so, you know, we don't need to go into why that necessarily is, but I know that you wanted to cover earnings just kind of generally and the risks that surround it.
Yeah, Joe, I think one of the things that a lot of investors kind of, I don't want to say it's an unsophisticated or newer or as you're developing your skill set when it comes to investing, one of the temptations that faces you is this concept of say, hey, this has been this has been a stock that I've really liked. I like it. Everybody's talking about it. Everybody on FinTwit loves this stock. Maybe I should go out and buy shares the day before they report their earnings and hope that they're going to put up a blowout number, and then that stock is going to pop and run up, and I'm going to get rich in a span of 24 hours, right?
Right.
And I want to caution investors to avoid that temptation, right? Just say no. Just
say no.
Don't own it. Right? Don't own it, Joe, just because of the earnings of that one quarter and hoping for a 24-hour pop. If you love the company, right, and you believe in it long term, sure, go out and buy it, but don't expect that you're necessarily going to be up. And one of the things that you've seen is that when you get companies that are very highly talked about, very anticipated, very watched, very much in focus on FinTwit, people will play that game. They will buy ahead. Well, what happens when you buy ahead and then you're disappointed? Well, these people move on to the next idea. So what they do is they sell. So it's a true buy the rumor, sell the news kind of event. Where it does typically tend to work a little bit better is when you have stocks where the expectations really aren't, nobody's following it, no one's paying attention to it. Everybody's betting a little bit against it doing well. In those scenarios, you don't have the supply from the day of news coming to the market that's going to weigh down the stock. Instead, you have, wow, they were way better than I was expecting, right? Yeah. That's a true upside surprise. If everybody's anticipating an upside surprise and they deliver an upside surprise, is it really a surprise?
Not really, no.
No.
Do you have
that's why they sell off.
Do you have any examples of stocks like that recently or kind of upcoming have low expectations like that?
I think actually you're going to see a number of these financial stocks and some of these basic materials stocks have very low expectations and not a lot of ownership and a lot of people talking about them and owning them. One of the things that you saw when I pulled up the semiconductor charts earlier, the applied materials, is that basket is, although it's technology, it's cyclical technology, really wasn't much on people's radars through the first half of this year. It's only been the last 8 weeks or so that people have been waking up to the idea that semiconductors could be entering a cyclical strong period with all of these consumer electronics refreshes, the advent of 5G, Internet of Things in the home, et cetera, driving greater demand for chips and the equipment used to make them. So I think that that's a good example right there of how you had, on the software as a service side, everybody expecting these companies to blow it out and report great numbers, which again, it's kind of like the whisper number argument, right? The official Wall Street estimate is only, say, $2 a share. But if everybody expects a great number, what's the real whisper, Joe, you know what I think they could do? I think they could do 250,
right.
Number. And that's what you have to be worried about. So I think the expectations were just too high for a lot of these software and services, and that's why their trend has been for these high flying names to report great numbers and sell off. Yep. And then the opposite has held true with some of these like semiconductor names and some of these other baskets that are underloved, where no one was paying attention, no one cared. And then they posted great numbers and the stock rocket higher. So,
absolutely, yeah, and that's what we really try to drive home with this podcast and with the research from Limelight Alpha, is that there's more than just the names that are talked about on Twitter, and there's more than just the top owned or the top movers on Robinhood. There's a lot more to the investing world than that. And a lot of times, these somewhat unheard of semiconductor stocks or these somewhat unheard of regional banks can be hard to find for somebody who doesn't know where to look. And so that's what we try to put forth.
And I think that Joe, you just nailing on something really important here, which is that concentration risk that a lot of people have run into. And we see it. I mean, if you're on Twitter and you're following some of these great people who are sharing what they're doing, there's a ton of overlap within these 10 stocks. It's like, there's two handfuls of stocks and there's tons of overlap amongst them. And very few, what's way more interesting is when I see a name that I've never seen mentioned before, right?
Right.
And that's kind of what we're trying to do on a weekly basis, is highlight those names that no one's really talking about yet, that they could very well end up talking about quite soon.
Yeah. Yeah. Trying to get kind of ahead of the curve there. So pivoting a little bit again, we released a new best stocks by sector report on Wednesday. I know there were some individual stocks in there that you wanted to bring up. So I'll let you take it away, share your screen, whatever you want to do.
Awesome. Yeah, I want to absolutely do that. I'm going to go ahead and share my screen. So again, if you're on YouTube, you'll be able to see it. If you're not, I'll try my best to walk you through it. I think probably the best way to go about this is just to click over here to, let's see here. Technology always working wonderfully. Joe, can you see my screen or no?
Yes.
All right. And are you seeing our website for, yeah, you are, right?
Yep,
All
you're
right.
good.
So if I go to top stocks for tomorrow, which is Limelight Service. Yep. And
There you go. We're there.
There we go. And then best stocks by sector is the report that came out yesterday. And Joe, we do this, as you know, every Wednesday. We have 30 stocks jump into that best list this week, moving up on strong, mostly because of earnings or strong money flow. And you can see how we have them ranked by sector here, and basics, for example, being the top one. Then we have descending by score. And you can kind of go down the list here and use this as a sorting mechanism, kind of like your funnel, to say which of these ideas are ideas that I would want to put on my watch list to perhaps own. And we're going to punch up some charts in a second, but I just wanted to show this to our viewers so they can actually see that we have names that are popping up and how to find those, like Polaris, for example, PII, which we've highlighted. That bounced back up onto the list from last week, where it wasn't on the list last week. Cisco Corporation, Hershey's, Helen Troy, Monster is an interesting stock. And we'll look at these charts in a second, but I just wanted to give people a feel for how they can use the service to kind of identify some of these stocks. So again, you can just go to Seeking Alpha and search up Limelight Alpha and see how to become a member and with a free trial and get access to that. So again, Joe, just to look at some of the stocks from that list that I went through that I thought were interesting. One of them, Joe, we had talked about on the show, or at least I had tweeted about the other day, which was kind of like the turkey day to go play, which is Newell Brands, the maker of things like those Rubbermaid type containers that you can, stash your stuffing and your turkey in and walk outside the house with it. I mean, I think, Joe, one thing, if one thing's true about Thanksgiving this year, it's not going to be your traditional Thanksgiving dinner.
That's for sure. Yep.
And I think as a result, maybe you do end up having increased demand over the holidays this year for some of these more portable ways to deliver that good family food to your family. And one of the things that's interesting about Newell is that it does pay a 4.7% dividend yield, and this weekly chart's pretty telling too. I mean, if you can break out above this 2022, 23 area, well, you could have some pretty significant running room there. So that was one of the stocks that popped up. I was also thinking about Polaris, PII. And Polaris is interesting because, again, you got double-digit revenue growth and down here and earnings growth. So 10% revenue growth year over year in the most recent quarter, and 15% estimated revenue growth in 2020 from 2019. I love those double digits, Joe. If you can get double-digit revenue growth and double-digit earnings growth, that's usually a very good sign for a company.
Yep.
And I think with Polaris, it's that whole idea of, okay, well, if I can't entertain my family in groups, maybe I can entertain them on the back of a new snow sled or something like that, right?
That's right. Snowmobiling is probably one of the best socially distant activities out there, right up there with fishing and maybe skiing.
Right, absolutely. I also wanted to highlight, again, from that list, Monster Beverage, which looks like it could be at a very interesting point if it can break out above this resistance here from its prior peak. Again, double-digit 10% revenue growth, and we got 14% EPS growth expected in 2021. I think that's a stock that people could have on the radar. And then, talking just about we talked about the post-election plays and how that may all play out. And one of the stocks that we that might want to have on our radars is Centene. CNC is the symbol there. So Charlie, Nancy, Charlie. Centene, they start off in the Medicaid. So basically state Medicaids will contract them to run their Medicaid programs. They've since morphed, and now through acquisitions and through launches, they also provide a lot of insurance policies through the ACA or Obamacare exchanges, and they also do some Medicare Advantage as well. So they theoretically could benefit from any kind of an expansion that, looks to get that last mile of people who have not yet been insured. They theoretically could benefit. So again, big revenue growth there, Joe, because of some acquisitions and nice solid double-digit earnings per share.
Yeah, we got some, I assume it would be good news for Centene this week too, from out of the Supreme Court, saying that they were not going to, at least that they were not going to completely gut the ACA. So I imagine for an administrator like this, that means that they're not going to lose that revenue. And with the new presidential administration coming in, that's the outlook, I'd say, is pretty good for a company like that.
Yeah. I mean, they're open. They heard the arguments this week, the opening arguments. A decision from the Supreme Court isn't expected until summer of 2021. So there's still that kind of overhang, and news could kind of cause the stock to bounce around a little bit. But it was encouraging to hear two conservative justices, Kavanaugh and Roberts, make comments or ask questions, make statements, I guess, during those opening arguments that could be read as bullish for the concept of, okay, we'll get rid of the individual mandate because, it has a $0 penalty attached to it right now. And that's the argument. Can you really justify this as a law, the ACA as law, under taxing authority if the tax is zero? So the thinking appears to be hinted at, right, implied, is that maybe Kavanaugh and Roberts would side with the idea if you get rid of the mandate, but you keep the rest of the ACA. And if they did that, then I think Centene would benefit. And then separately, if you imagine that the administration comes in and their goal is to increase enrollment in programs like Medicare Advantages and Medicaid and the ACA, then Centene should benefit from that as well. And then one last stock, just to show you, Joe, would be Toro. I don't know about you, but I'm not a big fan of shoveling anymore.
Nobody is.
So it tends to do well, obviously, from the summer on, because obviously it makes equipment used for landscaping, but it also has that winter component to it as well with the snow throwers.
Yep. Yeah, they have a nice little cycle, that business, because they sell all the lawn mowers, leaf blowers, weed whackers, and then yeah, you said it, snow blowers too. So they have a nice seasonal balance there.
Right, and it's kind of like that throwback to the Polaris where we were talking about, I mean, it's the same thing. You get the four-wheelers for the nicer months, and then you've got, the sleds for the winter months.
Right. I don't think Polaris makes jet skis, but they've got ATVs for sure.
They might actually, because they do have they have a boating component to them as well.
Okay. All right. Yeah. That's the kind of stuff we look for. It's better than maybe say a Vail Resorts, which as of right now is a very, very one-sided seasonal business. Although this is high time for Vail Resorts. But
and you know what, Joe? I'm glad you brought that up. I actually almost mentioned or highlighted the chart for that. Mountain is the symbol, MTN. Yeah.
Go ahead and bring it up if you want.
Yeah, let me go back and share my screen again so we can pull that up, because again, like you said, quite a seasonal strength story for Vail, and you can see people are warming up or cooling down, right? I don't know, right? It's the snow to the idea And it could very well be that some of that is driven by the properties in the real estate that they have, and the sale of second homes. I mean,
Yep.
obviously, we have very strong demand for second homes and homes for people to be working out of rather than in the big cities. So it could be that Vail Resorts benefits a little bit from that trend. And then, of course, like you said, and we were talking about before, that whole idea that, um, maybe skiing is not a bad thing to do with your family rather than go out to a crowded restaurant.
Right, exactly. Or going to, New Year's Eve in Times Square, perhaps.
Right.
All right. Well, with that, is there any do you have any kind of parting words for us? Anything to leave us with for the weekend and for the following week?
Just go back to that same thing that we were talking about earlier with earnings, and that's just that don't game them, don't play that game. It's not a game. You'll make money, and you'll get this false feeling of security, and you'll think that you can make money on it again, and then you'll take on more risk, and then you'll end up losing.
That's
So
exactly right.
just don't play that game. Look for high scoring stocks, come up with your catalyst, your reason for owning them, and then buy them and let the earnings play out over time. Don't go for that 24-hour I'm going to get rich stuff.
Right. This is here. We don't day trade here at Limelight Alpha. We don't option trade. We don't trade on margin. You guys know this by now. This is what is this? Episode 8. We've been doing this for a few weeks. You're starting to see some patterns, things that we advise for and advise against. So I guess we'll leave it at that. Take care, everybody. We'll see you next week.